right, folks. Normally, I don't cheer up any videos or take anything too seriously, but this is a very, very exclusive concept. Not even concept, not even that, because it's not like it's a PD array, a new formation, or it's none of that. It's nothing that's directly on a chart. No, it's instead a mindset and understanding, and just something totally different that no one else has taught. I can guarantee you, no one else has taught what I'm about to teach you right now. No one. Everybody on TikTok and Instagram is going to say, "Oh, well, the algorithm follows a certain order, and da 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 da. It's going to follow this and follow that." But they never know what cycle or order or how it actually thinks. They don't know how the algorithm thinks. In which that's not their fault. They're just not a charter student. They don't know ICT as well as me. So not in an egotistical sense. It's just they don't know. They haven't been exposed to it. So I'm going to be here to actually teach that. The levels of the algorithm have six different levels, or six different stages, six different cycles, whatever you want to say. There's two ways you can interpret the levels of the algorithm. You can interpret it in the form of a cycle, in which you, not saying that it's invalid to interpret it that way, but you can interpret it as like a pyramid scheme type of thing in like an actual cycle, like it does this first, does that second, does that third, does that fourth. That's valid. You can actually interpret it that way, in which you'll be starting from the bottom like this: bias, narrative, market efficiency paradigm, gap theory, order block theory, respect and disrespect. Okay. Now you're probably like, "Well, what does this mean?" The levels of the algorithm is the hierarchy in how it interacts with you directly and how it actually thinks. I should have put how it actually thinks, but how the algorithm actually works. Like it's literally the back end. This isn't something that you're going to see on the chart. It's a mindset and it's an understanding of what you're actually trading with and how it actually moves throughout this market. I said market, but market every single day. Now, I can't even say that today is a perfect example because the example is every single day, every single kill zone. It is following this. And not even saying that it's following it. This is just how it works. Okay. That's just how it works. Now, I could say that it follows the gap theory, but not even, because gap theory is what the algorithm just does. It just fills in gaps, and its main goal is to keep price balance. That's its main goal, regardless. So a reminder that this is not a concept, not a new PD array, not a new formation on the chart. It's none of that. Okay? It is a direct understanding of how this algorithm works and how it directly interacts with you. Okay. And then the hierarchy part is simply the order. I put this in order. Okay. First, you find your bias on the higher time frames, you drop to lower time frames, do your top down analysis, and that's how it depicts itself and how you actually get the direction on the day. The narrative is how it's going to deliver that bias you just found. So you find the narrative and you see, okay, price could potentially go up here, hit this, and basically the nitty gritty or the details and the criticals of price action on the lower time frame, on the high or on the higher time frame. I just chopped that. I just butchered that word. I'm gonna keep that in there, or I might just remove it. But on the higher time frame, lower time frame, you'll see all the details and the nitty gritty and the small stuff, and see, okay, price could do that, could do this. And you're just looking for the if and but coulds, maybe, possiblies, which will give you your narrative. And then once you see those things get respected, or you just see those, what's the word? Those specific things get fulfilled, that'll give you the how it delivers. Okay. The bias is just the confluences in the evidence that price is going to go to a certain direction. The narrative is how it's going to go in that direction. Now, the market efficiency paradigm is how it facades. If you don't know what the market efficiency paradigm is, the market efficiency paradigm is basically smart money being the liquidity provider for the algorithm, in which when we are providing that liquidity to the algorithm, what the algorithm is doing for us to provide the liquidity to it, the algorithm is actively manipulating or creating a facade. That's why it says how it facades. It's actively manipulating retail. So then once retail is manipulated or liquidated, whatever you want to say, we offer the liquidity. We are the liquidity provider to the algorithm so it can run, and then so it can fill in those gaps. This is how it drives. Once it has facaded, or whatever you want to say, once it's created that facade, and we are now in the market, me and you, because we are smart money, by the way. Me and you, we're smart money. So once we've provided that liquidity to the algorithm, that's when the algorithm can move up to the gap theory. Okay. And the gap theory is simply the algorithm seeking balance every single day, all throughout the market, all the time. That's all that is. Okay, understand? Got it? Okay. Now, like I said, one more time, just make sure you understand this. Once retail has fallen into the facade, next, smart money provides the liquidity to the algorithm to fully liquidate and manipulate those retail. Once that is done and they've been manipulated and a smart money has hedged into their manipulation or their liquidation, buying back their positions, which is the market efficiency paradigm, the algorithm can now go further and say, okay, let's drive. But we have to say, how is it going to drive? Well, that's gap theory. Gap theory is the theory, not even the theory, but the exact idea and the true understanding that the algorithm has nothing else or no other goal but to one, fill in gaps, which is seeking balance. That's all it's doing every single day. It's seeking balance. Like you want to see? Sure, I'll show you. Every single day, it's seeking balance. Like today, see this liquidity void here? Got the consolidation, then the void right there. Let me zoom into it a little bit. Hold on. Immediately, we come back down to fill it. It's just seeking balance. And then guess what? After it fills that, it comes back in to fill that up there. Now you're probably like, why does it stop right here within this area? Because it's seeking balance. How is this area balanced, JJ? Well, looky here, looky here. Okay. I think this is on the 15-minute too. Yeah, this is a 15-minute, 15-minute liquidity void. Okay. So it should be starting from, yeah, let me see. Wait, let me go to the 5-minute or the 3-minute, whatever you want to say. Yeah, so it kind of X's the consolidation here. Um, I don't know. That it's very, very weird because I would still say it's kind of sort of in the consolidation there. So I don't know. It's a little odd, but I guess we could use it from here to all the way. Wait, let me get it all the way to up here. That would be your liquidity void. This entire thing would be your liquidity void. Okay. Now, just from the outside and just looking at it and eyeballing it, you would say that entire range is imbalanced, in which it is. Okay. At this point of time, right, when we're up here and we see this gigantic liquidity void that's about 200 points wide, yes, the entire thing is imbalanced. So, what price does is it comes back in and fills it all. Now, watch this. Let me mark this as liquidity void. Once the entire thing has been filled in, once we've offered that sell side delivery to fill it in, let's go to the 5-minute. Okay, let's go to the 5-minute. Now, within, listen to me here. Listen to me. Within the liquidity void is all this sell side delivery, correct? We understand that? Okay, now watch this. Would you say that these gaps that are in here, are they balanced or imbalanced? Are these truly imbalances? Would you say that? No, no. You're probably like, what? Yeah, no, no. They are actually balanced. They're not imbalanced. You're probably like, what? How? Well, let me drag this because it's looking a little weird. Yeah, okay. This is probably the true what's the word? Liquidity void, because that's when it starts displacing. So right about there. Yeah, right about there. Let me get it for you. There we go. Now we're gonna stay on a 3-minute here because it looks pretty darn good. Now watch this, okay? Remember, a fair value gap is balanced when it has both sides of delivery, or any sort of imbalance is balanced when it has both sides of delivery delivered within that same range. So within this entire range here, let me get it for you. That entire range, what happens? We offer that sell side delivery. Okay. So that means the liquidity void has been balanced. Okay. That means the sell side delivery has been offered here. And now for this here, we're offering sell side. But you're probably like, okay, where's the buy side? It was already offered here. One, it was offered as manipulation. This was the market efficiency paradigm part. This was the manipulation. And then you have the actual gap theory kicking in and filling in those gaps. But you're probably like, wait, whoa. Wait a second. You're telling me that imbalances that were, of course, imbalanced, getting balanced can balance the imbalances that are forming while we're rebalancing the previous imbalances in the liquidity void? Yes. Yes. And then what also supports this, and I'm pretty sure this is a 30-minute order block. Yeah, look at that. So whenever you have imbalances within an order block, the imbalances that are within that order block are actually balanced. You're probably like, what? Yes. Because look at this order block. We're offering buy side right here. This is the buy side being offered. And then we have the sell side being offered here. Okay. So this is the order block. That liquidity void is a higher time frame order block. Listen to me. That that oh, I just had a brain fart. What was that? But that liquidity void is within or creating a 30-minute order block also. So this swing is going to, or this liquidity void, or basically this entire order block. Well, we're gonna really gonna reference the liquidity void because the liquidity void is inside the order block. You get what I'm saying? So anything within the liquidity void really would be balanced. People are like, what? What? Like what? What do you mean? For example, looky here. Let's go to the 3-minute. Anything after, well, before this here, right? Just before this, we would see that this is what? It's imbalanced. Duh, because it's only buy side, no sell side, right? So since we have buy side being offered here in the form of manipulation, okay, in the form of manipulation, right? The distribution part or the actual fulfillment of the gap theory would be to come down and fill those gaps, which is this right here. And then we come down and fill the entire liquidity void right there. Now, which fair value gap, let me turn off the kill zones, which fair value gap goes outside of the liquidity void when it is filling it? Which one? I think we all see it. It's right in front of our face. If you said this one, you are correct. Now, is this gap balanced or imbalanced? It is imbalanced. Why? Because it's outside. This fair value gap here is outside of the buy side delivery that the liquidity void offered, which is also a 30-minute order block. So the only gap it really has to fill or really has to drive up to fulfill and fully it just basically fulfill the gap theory to its max is fill this just to end off the day because that's the only truly imbalanced fair value gap that is there. And guess what? It goes all the way back up. Once it fills the entire thing, look what happens. Look at this. Let me drag this line over. Right there, right? You see, as soon as it goes past it and fills it, guess what? The market stops. Does it go over to these other fair value gaps? No. No, it doesn't. Why? Why does it not do that? Because it is within this liquidity void, which is already offered buy side. So any of these imbalances that are up here do not need to get balanced because they're already balanced. Like, look on the 1 minute. Is there more imbalances? Yeah, there is. There's this one, little tiny one right there. There's that one, little tiny one right there. And then, of course, there's one on the 5-minute right there. You see right there. Got another one here. Those imbalances do not need to get balanced. In which, look at what we're doing right now. Okay. Well, I'm not signed into my TradeAbate account, so we really can't see what it's doing right now. We're a little 10 minutes before, but you get the point. We stopped as soon as that gap got filled. Amazing, isn't it? That's gap theory. Okay. Just to give you a little brief understanding of what it really is. Geez, I did a lot of yapping. Recording's already at 14 minutes. Jesus Christ. Going back to this, in which I still have to explain this, you're probably like, okay, if we're going to fulfill gap theory, how are we going to get in on the fulfillment, which is the actual delivery of us fulfilling the gap theory? You're probably like, well, can you show us an example of what that means? The fulfillment of the gap theory is this right here. The actual delivery to rebalance this or balance this. That's what gap theory is. It's seeking balance within imbalances. Simple as that. Liquidity voids or fair value gaps. Those are the only two main imbalances that you're ever going to use. So to fulfill the gap theory, what we must do is come down to fill that liquidity void. Simple as that, right? Super duper simple. So when we understand that the gap theory must be fulfilled, how can we get in on that? How can we say, okay, we know it's going to go down and fill that liquidity void, but how can we get in on it? That's where the order block theory comes in. Okay. The order block theory, in short, is basically the algorithm directly, when I say directly, I mean directly, providing an opportunity to you through PD arrays and signatures. What? 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 Yeah. Yeah, for real. It is literally, literally Okay, do I have to emphasize that? Literally, not metaphorically or in the form of a simile or as a hyperbole or hyperbole, whatever you want to say. Literally, it is providing you an opportunity before it fulfills that gap theory. Before it. Before it. I'm being so serious. Before it. Want to see? Watch this. Now, I took kind of sort of a different entry here. Let me remove these drawings. So, let's go to the 9:30 opening. Right here. This is 9:30. See? I'm going to show you where I entered because I have it here in chat somewhere. Yep, I entered right along there. Now, I had a totally different entry in which I kind of sort of entered at the respect of that what is that? Is that a propulsion block? This is today's price action, by the way. This is today. I'm trying to see, is that a propulsion block or an order block? Let me see. Wait. Let me go to today's price action. No, not the 15-minute, 5-minute. Hold on, let me, I like that precision. Hold on. Let me go to the top here. Yeah, actually, I think that might have been. Would that have been? I have no clue. Wait, because then on the 3-minute, it tops out here. We go up and we actually break it. Yeah, yeah. So actually, that is a propulsion block. So it might be a 1-minute propulsion block potentially. I think it is. I think it is a 1-minute propulsion block, right? But within this order block, propulsion block, whatever you want to say, it's kind of sort of the same thing. What I was looking at was, let me widescreen this or full screen it again. This is the 9:30 opening right here. I was looking at the failure of this immediate rebalance right here. So when I seen that we had 1, 2, and then 3 come back down as a bullish immediate rebalance, I was like, okay, today, the whole narrative was today is it can go either direction. But I was like, okay, if we see this immediate rebalance fail, that'll be super duper good because it's showing that it doesn't have any willingness to go higher. Simple as that, right? So when I saw that next candle drop down, I was like, okay, that's the first candle. I said, now we need that second candle to start going lower. And then once I seen this second candle right here open up and start dropping lower, that's when I shorted. Immediately, I shorted like right around here. It was like 670, 665. I don't know where it was. You can see it on the right side, but it was somewhere within this candle, right? In which you're going to go see my execution or whatever, my little P&L thingy, because I forgot to log in a TradeRate this morning on TradingView. It's around the same place. See that? And then I also say the same thing. Where is it at? I say the where I got out at, or what I usually use. Oh yeah, I said I used the failure of the 933 to 34 immediate rebalance, in which look at that, 31 to 34. So that's basically the immediate rebalance I'm talking about. Now that's what I use as an opportunity. Okay, that's just a form of a highly advanced entry mechanism in which of course, I am going to teach later. Don't worry. Hold on. Let me show you to. Let me show you to you. Right there, ICT highly advanced entry mechanisms. On the 23rd, that's coming out. So don't worry, that is coming. But going back to the chart, how it offered an opportunity was one, come, comes up, creates order block, respects fair value gap, comes down, activates order block, goes up into it, respect, goes up into it, respect again. You wait for the movement away from it. Once it starts moving away from it, boom, there's your opportunity to enter. Simple as that, right? Now you're probably like, okay, we got the opportunity, but how will we know that it's actually going to, you know, respect it and actually deliver away? That's what the next part is. Respect and disrespect. How it tips its hand to you. How it basically says, this is the final straw or the last gasp before I'm really about to go and really about to, fulfill the gap theory. I've given you your bias. Okay, this is how the algorithm is thinking. I've given you your bias on a higher time frame. All your confluence is all you need. You know the narrative. You understand how we're going to deliver and what the whole goal is of the day. We've already manipulated. We've already fulfilled the market efficiency paradigm by look here by manipulating during pre-market creating a liquidity void. So two things have been created here: an excuse to fulfill gap theory, and then an excuse to fulfill the market efficiency paradigm by going all the way up here, running all these highs that retail thinks is support. I mean, not support, but resistance. And when we short above those highs, we are fulfilling the market efficiency paradigm because we are providing liquidity to the algorithm so the algorithm can fully liquidate the retail that is, what's the word? What would I say here? What's the word? I can't really explain it. Oh yeah, the stop losses that all the retail has up here, okay, or all the buy stops that the retail has up here. So if they expect this to break and retail has buy stops up here, those are going to get ran and of course absolutely liquidated. And the ones that think is going to respect this resistance or whatever they call it, they think it's going to go down. Guess what? We're going to run their stop and then completely liquidate them by first buying back their position above that resistance and then further liquidating them by just dropping the market, okay? In which we're we are buying back their positions by buying back or shorting above that resistance. Once we short or offer the liquidity to the algorithm, because whenever we place a position, that's us offering liquidity to the algorithm. Once we do that, the market efficiency paradigm has been fulfilled. Well, not yet. It's fully fulfilled once we actually deliver. But of course, we have to deliver by fulfilling gap theory, in which gap theory not necessarily formed, but an excuse to fulfill gap theory was right here with this liquidity void, in which we came all the way down, liquidating and completely taking out all the retail that we're shorting here, or whatever you're saying, or buying if it broke above it, or basically shorting the resistance, whatever you want to say. Those people are completely liquidated, in which we created the facade right there. That's the facade. While we created the facade and or manipulated, we had an excuse to fulfill gap theory. Once we done that, now this is where everything starts to kick in at the same exact time. The opportunity is right here, order block. See that? The opportunity has been created. Drops down, activates it. This is where the respect and disrespect come in handy. This is the last point. Like if I separate this, that is the last thing the algorithm has to do before it delivers. Okay, this is everything it goes through before it delivers, basically. This is the cycle, the hierarchy, and how it interacts with you directly. See that right there? It has to respect and or disrespect opposing arrays, okay? So we must respect this order block and disrespect opposing arrays, in which the disrespect would be basically this liquidity void because it's also an array. You could apply quadrants to this and validly say that it's an array, in which if I apply quadrants to it, as I just said, from here all the way to there, about, yeah, right there. Why is it so thick? What the heck? Okay, there we go. We can clearly see we fill it and completely disrespect the equilibrium, which is the most sensitive part of any array, in which we completely, run through it. All right. That is levels of the algorithm. And honestly, I really do not think I have to. I think I'm having a. Can I even talk? Jesus Christ, brain. But I'm looking at the recording time. It says 23 minutes and 6 seconds. I genuinely thought that this was going to be an extremely long teaching. Like when I say extremely long, extremely long teaching. But no, I could seriously end this video here and that could literally be it because I've taught you everything about levels of the algorithm. The only thing I can really say is like give you more examples, but examples of this forms every single day. Every single day. Every single day. Every single day. Every single kill zone. Whenever. This is what it's following before it displaces, goes on a liquidity run, does anything. This is what it's following. So I could keep this under 30 minutes or I could yap to you. But anyway, I got school to go to in about an hour. I'm on my lunch break or whatever. Uh, yeah, I'm kind of speechless with myself. Honestly, I thought this was going to be super duper long. But anyway, enough for me yapping. You've officially learned the core foundation or the true interpretation of the algorithm and how it really functions. I wish I could make this a bit more serious, but my voice makes it sound like I'm lying about the algorithm, whatever, because I sound like a squeaker, like in the PlayStation 4 parties years ago. But anyway, actually, I'm going to end this video here. 24 minutes and 18 seconds. I hope this was good. Hope I taught you well. This should give you a lot of insight on how the algorithm truly functions, how you can really interpret it, and how you can really understand its language, okay? Now, I think I can officially say you understand its language, and this is the true language of the algorithm. Anyway, I'll be in this video here, actually, and I'll see you guys in the next one. Good luck and good trading.